I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. Interesting times, that's for sure.
What's your take on the market and what's driving this volatility?
Well, on one hand, you can't help but turn on the TV, and every single day it's chaos stories of one sort or another, whether it's people in the United States going crazy, or bad news hitting some individual stock, or assassins in Saudi Arabia. I mean, it's something every single day. And there's a tendency to kind of hope that there'll be a news story that can kind of displace all the bad news and make people happy again. So there are lots of people out there predicting that the stock market will have a big rally after the election next week and kind of be a sigh of relief for people to say, well, finally this is done with and we can get back to normal, or hope that individual stocks such as Apple or Facebook will report positive earnings and get everyone excited again about buying stocks. But really, I think you have to kind of ignore these individual news stories and look at the market action itself. And the volatility that we're seeing really is unprecedented in some ways. Now, I got to say, when it comes to individual stocks, I've actually seen this sort of action before. It's been 18 years, though, and what I mean by that is there are lots and lots of individual stocks that have broken down over the past couple weeks and just gone straight down. I mean, they're almost basically crashing. Netflix is one example. NVIDIA is another one. Boeing is now doing this. IBM has done this. I mean, these are stocks they've fallen and they're down over 20%. They're far away from the 200-day moving averages. And I've got to go back to March, April 2000 to see similar action where stocks just made new highs and many are just going straight down in a short amount of time. And what happened back then was it was internet stocks that were doing this, and as the stock market made a critical top and then we had a bear market for 3 years basically. I'm not saying these companies or stocks now are going to zero or going bankrupt as many as those did. But I do think we actually have seen a significant top place in the U.S. stock market, and that is what is really the cause of volatility. When you have tops being made, the volatility is a huge characteristic of that process, and it's trading differently even than it did in February. That was more like a violent correction. It took place really over 10 days, and then we spent all summer essentially consolidating, recovering. But when you get a significant top that only comes around really since 2007, the U.S. stock market, since the last one, the declines don't just last 2 weeks. They can go on and on and on. And even though we are oversold, S&P is bouncing now off 2,600, can easily stay above that level for a few weeks, I think. The fact of the matter is, I can't call an end to this decline until I see a real panic washout in the market, and I just haven't seen it. In fact, the VIX is, as we speak, below 25. It got to over 40 in February. I'd like to see it get at least above 30. And sentiment surveys like the Investors Intelligence Survey, the number of bears in that hasn't even gone above 20% yet. And when you have, since 2009, there have been times when the bears got above the number of bulls. The number of bulls are at 50%. So I just think everyone's very complacent. We are getting a bounce of the 2600, but, and most people honestly think this is over. They're expecting a rally after the election, but I just want to warn people, if we do hold up here and go below the lows set this week or go below 2600 S&P 500, it's going to be a scary decline because people aren't prepared for it. And it's just, I think these stocks falling, individually falling is a giant warning sign not to be ignored.
Is this a case of, for nearly a decade now, the stock market's been so positive, people can't believe that it could be anything else but?
Yeah, I think that pretty much hits the nail on the head. And really, I mean, it's very difficult for anyone not to think that, myself included, because when the stock market took that big hit in February, it took everyone by surprise, and then we recovered. And I think that experience also seems to convince us all, myself included, that, we just had that happen. How can it happen twice in a year? And so forth. In fact, in August, September, when the market made a new high, I was looking for signs of strength that could carry us up into the rest of the year. And what I needed to see were sectors that could lead the way, go to new highs and just go up and up and up. And the three sectors, really two, that went to new highs and had, the possibility of continuing to do well were the marijuana stocks and defense stocks. Boeing, there's an ETF ITA for the defense industry, and Boeing's in the Dow, so, I think it's more important than the marijuana stocks. But, and bank stocks also had a chance. They look like to possibly rally, but the thing is, all these different sectors that could become leaders, they just had false, breakouts essentially last month and have dumped. So the defense stocks, they're just collapsing over the past 2 weeks. Boeing took a skydive down, but so have other defense contractors like Lockheed Martin, General Dynamics, just all across the board. And the bank stocks really only went up for a couple of days, and they're, already went through the lows of February. So I don't see any leadership sectors that can really do more, that can drive the market to new highs and beyond. I mean, we can get bounces and stuff, but that's, to me, it's just not worth trying to trade that. I will say this, there are, it doesn't mean it's impossible to make money buying things. So, for example, this month, even though the market is down, there are sectors that are showing strength, that are up.
And Mike, maybe we'll discuss those sectors when we come back from our commercial break.
Sure, sounds good.
We'll be right back.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mike Swanson. Mike, just before we went to break, you said there are sectors that are still positive. What are they?
Oh, yeah. Well, we have the utility stocks, REITs, and drug stocks such as Procter & Gamble, which did have earnings and went crazy when they had their earnings. But The one sector I gotta say that really looks the best is gold and mining stocks. And that's a change of story. Gold is trading opposite the stock market this month, and gold, of course, it broke below 1,200 in August and went down and formed 1180 as support. And I'm not saying it's going to go straight to the moon right at the second, but I see the action is very constructive. It's just trading better in the stock market, breaking away from it. The mining stocks are a little trickier. I mean, in the long run, they are going to have much bigger upside potential than just the price of gold itself. But some of the big cap mining stocks, they can get caught up in the stock market volatility for periods of time, and the action is almost crazy. Last week, for example, Newmont and several of them fell over 5% a day. Then they came back the next day and so forth. So they're kind of, I think, prone to some strange moves. But I think this is a time to accumulate both. I mean, I think people really, it's time to get out. I mean, over the past couple of years, these tech stocks have been the fad. The Netflixes, the Nvidias, Facebook, Amazon. I think it's time for people to get out of those. Just sell. I mean, get out and buy gold in the mining stocks. And I think, let's do that with every penny you have. But I really think going forward in the next couple of years, that's the best place to be invested in this market. And we saw global markets go into a bear market already in June. China dumped, emerging markets dumped. Remember, Turkey blew up. And now just the U.S. stock market is following suit. We're getting the bounce, but I really think it's a dead cat bounce. Just lasts a few weeks at the most. Can get lucky enough to do that, and I hope it does. I want it to go up. It could, to help people get out at higher prices, but I just think the story is gold and silver and the mining stocks. One last note I'll make on that is that in the Commitment to Traders report, we saw the commercials go long silver for the first time. This happened a couple of weeks ago, and in gold, they reduced their commercial short positions to the lowest level since 2002. So that's the so-called smart money, and they've obviously been on the long side of things. So, I know I'm downer on the U.S. stock market. It wasn't like that in August and September, but it's just what the market action has done. It's not a specific news item. It's just a tough market.
We'll have more with Mike Swanson right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, anything in the currency markets that sticks out for you?
Well, the currency markets are pretty funny because starting in June, the U.S. dollar became the strongest currency in the world for a couple months. And it continued that trend into September, and then it weakened as the U.S. stock market dropped. And now at the moment, it's strengthening up a little bit. So for now, the dollar, I'd have put all my money in one currency, it would be the U.S. dollar, but I don't think that trend is going to continue. My suspicion is the stock market is going to be much, on the downside. It's going to be worse than people are thinking now. And if we don't hold those lows of 2,600 S&P 500 and have another leg down, at some point the Fed will come out and say, okay, we're going to pause on raising these interest rates, and that will put a bid on gold And because what the result of it will be is the dollar will top out and start to go lower. Because the reason the dollar has been so strong is primarily because the Fed's been raising rates while the rest of the world has not been doing that for the most part. And if the Fed stops, then that whole underpinning for the dollar will be gone. So, I think for now the dollar is the strong currency, but watch out, because if the stock market goes lower by the end of the year, that will no longer be the case.
Do you see any other currency that would creep up then in value?
Well, it's tough. I'm really not sure which one is going to be the best. On one hand, the Chinese yuan will show pockets of strength, and then it starts going back down. It's the same case with the euro, and now we have this situation in Italy, which is, they're on the brink of busting their budget, and there's a controversy with the European Union and so forth. So honestly, I'm not really sure which currency is the best one at the moment. I want to see how they trade when the dollar goes down, which one kind of holds up or breaks away from that trend. So I'm just watching the rest of them for now, not really sure which one will emerge as the best.
Right, until Brexit settled out, the pound's pretty iffy too, I guess.
Yeah, and honestly, I have no clue how that's gonna be resolved. It seems like a different news story on the Brexit situation every single week. And I mean, today the news story is Merkel might be finished politically or on the way out the door. So that's a pretty big shocker. It's just political chaos over the world, more and more. Since we've been talking the past 2 or 3 years.
So time to grab our 4 gold bars, curl up, and hide in a cave?
Well, you don't have to. It's not that scary yet, but if you watch TV all day, it certainly can feel that way. But I don't think it's that bad.
Mike, any thoughts on the marijuana stocks?
Well, they've been the hottest thing all year. I don't think anyone can doubt that. It was incredible. They had an amazing run in January and pulled back a little and then broke out again into the legalization in Canada. And now they've taken a big hit, as we just seen all this selling, hit the U.S. stock market this month. They got smashed. So what I need to see is for them to bottom out. I shouldn't put it that way. I need to see them kind of make a bottom and hold up for a couple of weeks before I'm convinced that the selling in them is over with. The best thing kind of signal to see that would be if the stock market's dropping and the marijuana stocks aren't, like say for 2 or 3 days, the Dow is down and the marijuana stocks are just sitting there not falling anymore. That would be a good sign that they're, pretty much bottomed out and will resume their strength. So I'm just kind of watching them for now. There's other people probably smarter than me when it comes to that sector that got a better handle on what price might be the right time to buy these individual stocks, but I'm really not really sure. So I'll just have to watch the action and let me see some strength there.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, and you can also find us on YouTube on Talk Digital Network. And I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.